So that's the other thing. Now, the other major factor is inflation protection. Now, when I was 40 years old, I bought a $100 a day policy. Okay? Now, when I'm 90, when I'm thinking maybe I'll need this policy, $100 a day isn't going to buy much. I mean, that may be lunch at McDonald's in 50 years. So there's got to be a way for that initial benefit to go up to help fight against the ravages of inflation. So I bought a 5% compounded. And that means my $100 in year one day benefit would be $105 the next year. It goes up by 5%, so now it's about 110 and change, and then 115 and change, and then it's probably 121, and so on and so forth. I think my benefit today, it's about 12 years later, is 170, 175 a day. And so that's enough to take care of the cost today. That's almost $6,000, $5,000, $6,000 a month. That's about what the costs are, so I'm in good shape there. So without this inflation protection, the benefit that you buy is meaningless. I had a client email me earlier this week, and he said, I'm looking at a long-term care policy. My wife works with Delta, and they're newly married, and his wife had bought a long-term care policy from me many years ago. And so I'm looking at their policy at Delta, and it's a pretty good deal until you add the inflation protection. It triples the price. And he said, should I buy the inflation protection? I said, well, if you don't buy the inflation protection, you're in your 40s, don't buy the policy at all, because that $100 or $150 a day that you start with today is going to be virtually meaningless down the road when you're in your 80s and 90s. So don't even throw your money away without the inflation protection. Now, if you're 70, 75 years old, may or may not buy the inflation protection. I may buy a bigger daily benefit. Instead of $100 a day, I may buy a $200 a day policy without inflation. So when I'm in my 90s, I will still just pay $200. And each situation is different. But if you're in your 40s, 50s, 60s, you have to have inflation protection. Otherwise, the benefit you think is going to help you today, you don't need the policy today. You need it 20 years from now when you become older and aren't able to bathe or dress or have some cognitive issues, that you want that benefit to keep up with the cost of inflation. So you've got to have that. So the major cost the parameters besides your age and health at application, and whether you're married or not, don't ask me why that is. I can tell you, but you don't want to hear it. Is how big your daily benefit's going to be, how long the policy will pay once you go on claim, and whether you have inflation factors on it or not. That's just a general primer on long-term care. Hey, listen, if you want to find out a lot more about it, I wrote an ebook on it. It's for free. Just go to theltcguy.com. So that's www.theltcguy.com. You get a free ebook all about long-term care. I'll tell you, we'll go into a lot more than I've been able to do here. You're going to love it. It's easy to read. You can pass it around to your friends. Totally free. www.theltcguy.com. Enjoy the ebook.